Hello traders, the title of the video is how to avoid the overbought stochastic trading mistakes like a pro. Do you use the stochastic indicator? Do you trade the overbought stochastic trading signal? In this tutorial, I want to share with you tips and tricks that you can use to avoid the overbought stochastic trading mistakes. Let's get started. All right, so we have a real example here, and the financial instrument that we are looking at is the Liberty Ventures, belonging to the technology sector, internet content information. This is an American stock, EPIC LVNTA, Lima Victor November Tango Alpha. All right. So as you can see on my chart, I have my stochastic 833 is well overbought right there. It's now in the zone of 91. All right, so normally trader use 80 as 80 as overbought level. Some trader use 75 level as overbought level for the stochastic. Here it went up to 95. So a lot of stochastic traders love to sell each time that the stochastic is overbought. If you look in this session here, the stochastic was also overbought, okay, in the same zone, but the price was going up. All right, how do we avoid the overbought stochastic trading mistake? So trader may say, Joe, you talked about this before. But what we are doing today, we are analyzing Liberty Ventures, all right, using the overbought stochastic indicator. All right. The first thing that we want to do, if you want to avoid overbought stochastic trading mistakes, is to trade the price. We are not trading the stochastic, we are trading the price. Therefore, when the stochastic is overbought, we switch our attention to the price. If we fail to do that, we'll be trading the stochastic will pull back, and the price may not pull back. The second thing that we can do to avoid overbought stochastic trading mistakes is to draw trend lines. Very simple technical tool. Trend line, draw your trend line. So here we are going to start drawing trend line on my chart. I'm on a monthly chart. We can apply this strategy on any time frame. All right. I prefer this one like this. We are connecting this low here, and that one here, this one here. So how my trend line? So if we extend it, look carefully, we're going to extend that trend line. Happy? Everybody's happy? That's the trend line. Let's change the color of that trend line into orange. So what is happening? That trend line was supporting the price. Now the price break below it, and you tested it. So this is what the price is doing all the time. So the price break below the trend line and was retesting it. But if you look carefully, my friend, so this is not bad because break below retest right there. It's stochastic overbought. All right. Stochastic overbought is indicating to us that the price is at a resistance level. This is the resistance that the stochastic is pointing to us, that trend line that the price break below. It was retesting. So stochastic say, be aware, we are at a resistance level. That's all. That's all the stochastic is saying to us. Be aware, we are at a resistance level. Which resistance level? This one here. So drawing a trend line will also help us to improve our overbought stochastic, because the overbought is pointing to us a resistance level. We want to know where are those resistance levels. All right. Another thing that we can do to avoid the stochastic, the overbought stochastic trading mistakes, we need to apply the Fibonacci extension. In this case, for Liberty Venture. I told you that though I've been talking about overbought stochastic for years, what we are doing today, we are analyzing Liberty Venture. Okay, so price went up from here to here and then pulled back. Now it's going up there. Let's apply Fibonacci extension to that price action. So what I say to traders, because though the price is retesting that trend line here, is also forming a new higher high in comparison to this one here. Alright, it's retesting a very trend line, but we have a breakout above the prior high. So though we have a break below retest, which is a resistance zone, we can consider that, we can pay attention to it. The price exhibits a new higher high. What we say to traders at the Pro Traders YouTube channel is that if the price breaks above the prior high, which is this one here, and display a new higher high, the next challenge for the bullish momentum is the 138.2% Fibonacci extension level. So in this case, we will say to traders, priority to bearish signal below that 138.2% Fibonacci extension level at $59.44, and priority to bullish signal above it. So draw your Fibonacci extensions when the stochastic is overbought. This will also help you to avoid the overbought stochastic trading mistakes. The next thing that we need to do to avoid the overbought stochastic trading mistakes, very, very important, is to check whether we are at a profit target level. So we want to check if we are at a profit target level. That will also help us because one group of traders are buying, and if the price reaches their profit target level, they would like to take some profit, yes or no. Or one group of traders are selling, and the price reaches a target level, they will be willing to take some profit. For that, there's something here that I want to talk about. It's the market geometry. You can see that the price was going up nicely in a rising channel here. If I put another line on top here, price was in that red channel. Well, so we'll draw it roughly here. If you accept that, was in a rising channel. Now the pattern, the market pattern was bullish. Now we have a balanced market here. Call like that in horizontal. So we have a consolidation. So have a consolidation and a breakout. So professional will use using market geometry the width of this channel and project it up like this, and we can say that we are at a target level using the width of that target. So in order to avoid the overbought stochastic trading mistake, we must use the profit target level. So those are the few things that we can do, all right, to improve our stochastic trading or our overbought stochastic trading, okay, to avoid overbought stochastic trading mistake, all right. I have not yet finished, my friend, all right? I have not yet finished. All right. The next thing that we need to do to avoid overbought stochastic trading mistake is to pay attention to the candlestick pattern at the resistance level that the overbought stochastic is pointing to us. So very, very important. We must analyze or monitor the candlesticks, all right, in that zone. So here we are now, stochastic is overbought, pointing to that resistance level. We are also below the 138.2% Fibonacci extension level. Now we monitor the candlestick bar. I'll move this line a little bit up. You see that this candlestick bar is quite bullish. They push it purposely. That's why they push it. So people, you can see that people start selling here. The smart money said, no, we don't want to sell here. If one wants to sell, it's better to sell on the edge of that significant, okay, a trend line break below. We want to retest it. This is what the price want to do all the time. Break below, retest, breaks above, retest. So they say, we want to bring it there. So people were trying to sell, which is normal because it's a kind of consolidation here. You see this one here, push it up, people sold it down. So they say, all right, bring it here. This one might bring it here and let's see whether there will be a demand to sell it. All right. So now we monitor the candlestick bar. So we have a doji, all right, let's say an inverted bearish hammer, tail, small tail, and also a shadow on the top. So see how they sold it gently on the edge of that trend line here. Now it's coming down a bit, but there is a support here. What's going on? So the next thing that we can do apart from monitor, so now we monitor, so there is a bit of weaknesses developing here because of the candlestick bar that we are seeing here. But before that, those bearish candlestick bar, we have a tall bullish candlestick bar. Whenever we see a tall candlestick bar, I just mentioned this, we need to highlight the high, the low, and the median line. So I recommend to trader to watch the full length for this video because I got one more thing I want to share with you to improve your overbought stochastic trading. Trader will draw the median line. So as the price coming down, you can see each time it comes near the median line of that tall candlestick bar, there are buyers there. Become tricky. All right? So the professionals are very careful, though they are selling. They know that because this candlestick bar is a long candlestick bar, there is a support here, which is the median line of that long candlestick bar. So they push it down, they take some profit, come near, they are taking a bit of profit. So if one is selling here, that Liberty Ventures, one should be aware of the median line of this candlestick bar. So priority to bearish signal below that orange trend line up to the green line here, which is the median line of this candlestick bar. If it breaks below that green line, well, let's say in a zone of $49, final resistance, break below, it tests final resistance, then we can continue to sell it to bring it to the low. But you need to be very careful here because what is happening is a lot of traders are thinking of continuation pattern, a bullish move, a consolidation. What we are seeing here is a breakout, but that breakout will become truly a breakout only if the price finds support where above that significant critical Fibonacci extension level, the 138.2% level. Though we have a breakout in place, if you are trading this stock, remember that yes, it is a breakout, but that breakout will be confirmed only if the price finds support above the 138.2% Fibonacci extension level. If you buy above that level, your target will be 161.8% Fibonacci extension level before we will expect a proper breakout above that 161.8% Fibonacci extension level, because the 161.8%, the 261.8%, and the 361.8% are the popular Fibonacci breakout zone. So the last thing that we need to do to avoid the overbought stochastic trading mistake is just very simple. If you forget everything that I've said, this is the most important part, is to use what? A top-down trading method. That's it. That's it, my friend. Top-down trading method will definitely help traders to avoid the overbought stochastic trading mistake. So you may say, George, I have not yet mastered the top-down trading method. So pay attention to the price action. You are not trading the stochastic. Draw your trend line, okay? Draw your Fibonacci extension. See if there is a profit target, if the price is at a profit target level. Pay attention to the candlestick pattern in the vicinity of that resistance level. But the most important part is to use a different time frame trading method. So now that we see those weaknesses here, this is a trading setup. We know that we must be aware of that green line, which is a support level. Let's go to the signal time frame, which is the daily chart. Okay, go to the daily chart. Is there a signal? Yes, there was a signal. See, the price formed a double top with a higher high. So people say, George, double top is always equal high. No, it's not always equal high. Sometimes we have a higher high, so this is the first high, and then followed by a higher high. But if the price comes back below the prior high, it's a double top. Right? It's a double top here. So we have a bearish chart pattern in the vicinity of that resistance level that the stochastic was pointing to us on the monthly chart. So where is the signal? Signal is when this trend line is kaput, this one here. See here. So it breaks you know that the common sense, you remember I recorded a video recently about the power of the common sense trend line. Trader did not bother to rate that video, and maybe they were very, very polite. So they say, George, we love you so much. It was a useless video, but I don't want to mark it down. I keep quiet. I can understand that. But you don't have to. Let us know if it's a useless video by giving us the thumbs down. Okay? Don't be afraid. All right? We are still friends. Okay. So, all right. Common sense trend line kaput. This one come on. This one try to go up a bit. They push it back down. The signal is there. The double thumb. You see. Return this one. Even here we see nice one. You see, it closes below the prior high. You see how they push it down? This is a bearish engulfment on the daily chart. In the vicinity of that resistance level, it's a bearish engulfment right there. Now, then this common sense line, very important. You see how this candlestick is very small, it's good. And people were expecting a bit of rally. That would be better to come a little bit higher. No, they didn't allow it. They push it down. They sold it here. So there was the signal there, all right? So as the signal is fired here, this is the green one, because you want to sell, you want to see a bit of rally, yes or no? You want to sell high, you want the price to go back a little bit up. And as during that particular, that's why I put my vertical line here, then we drop it down to the hourly time frame. Pay attention to the vertical. You see that this is the day it went up a bit here. These people, they didn't allow it. Sometimes they sell fast, you know, so it become tricky, all right? So you can enter here, or if you struggle to enter, now you have a channel in place on your hourly time frame where you can enter. Boom. Is that too much for you to do? Yeah. But you see, if you sell here like this, you need to pay attention to the price structure. Sell down, it did not form a new higher high. So you have to be very, very careful. You see here, boom, didn't form a new, it didn't form a new lower low. That's what I'm saying. It did not form a new lower low. In fact, we have a triple bottom here. But this is the negation of a signal. So a triple bottom, which is a bullish chart pattern. Pay attention carefully, my friend, to what I'm saying here. This is about the price structure. Price form a bullish chart pattern in a declining channel, which is a lousy one. But not only that, as the price going up, the price form a lower high. Now, you don't need anybody else's permission. It's the negation bullish chart pattern followed by a lower high. What kind of nonsense is that? There you go. In comparison to this one here. Okay, but you want to sell the edge of this channel here. All right, so you'll be see this another sell, but the price is not forming. So this one went to display a new lower low in comparison to those one, which is good. All right, so you want to pay attention here. Down to display forming a new lower low. Now, as it came again quite close, some people, oops, where are we? Sold it here. But then you form a higher low. That's not good for the bearish traders. They bring it back here, tricky one, because the price form a higher low yet again. But people are selling on the edge here, but the only thing is that the price is not forming a new lower low. Why? Why? Because of what is happening. So now you understand why it's good to use the monthly chart. If you are not on the monthly chart, you won't see that there is a long candlestick bar. If you are using the weekly chart, you may not see it. So professionals know that median line here. So they are very careful as they are selling on the hourly time frame. They are aware of that median line and they are very, very careful. All right, so this is just to, so before I wrap it up, my friend, I want to remind traders about one video that I recorded recently, and that video also will help traders to improve their overbought stochastic trading. The title of that video is 3 things that one should know to improve reversal trading like a pro. I will say it one more time, 3 things that one should know to improve reversal trading like a pro. That video, we post it at a 2-4 stock trader YouTube channel. Digit 2, digit 4 stock trader YouTube channel. That video will help traders to avoid the overbought stochastic trading mistakes like a pro. So to quickly summarize this video, as you see, this is a real-time demonstration for somebody who is trading this stock using the overbought stochastic. We have a breakout. All right, that breakout will become truly valid only if you go above the 138.2% Fibonacci extension level. If one buys above that level, the next target is 161.8% Fibonacci extension level. So we have a bullish channel followed by consolidation. This is a continuation pattern. We have a breakout that is occurring and the stochastic is overbought. We need to be very careful. But in order to avoid the overbought stochastic trading mistake, we need to pay attention to the price action, the trend line, draw the Fibonacci extension level, see if the price is at the profit target level, pay attention to the candlestick pattern in the vicinity of that resistance level, and most importantly, apply top-down trading method. By using a top-down trading method, you will trade the overbought stochastic anywhere, anytime. Because if the signal fails, you will know. If there is no signal to sell, you will also know. If you should buy at a time when the stochastic is overbought, you will also know if you are applying a top-down trading method. But with traders that are new, they may say that, Joe, that's too much for me. But all I will say to you, take it one step at a time. Keep working on it. By the time you know, all right, you become a better trader. Keep practicing, and nothing can replace, practice, all right? This is the end of the tutorial. If you have any question or suggestion, feel free to put in the comment section. In due course, I will be recording another video to answer your specific question. If you truly find this video useful, let us know by giving us the thumbs up. If you think that, Joe, this is another useless video, please let us know by giving us the thumbs down. If you think that this is an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to avoid the overbought stochastic trading mistakes like a pro. Happy trading to you all and speak to you soon.